In this video, we will look at the dark cloud cover pattern, a very interesting and a very dangerous pattern for people who are holding long positions in stocks or whatever market you are trading. So this is a daily time frame chart of Moody's ratings agency. So the first condition, see these two candles are a dark cloud cover pattern. So the first condition to identify a dark cloud cover pattern is it must come after a uptrend because it's a bearish pattern. So that's condition number one. Condition number two, the first candle should be a tall green real body. There is no specific definition of tall, but if that candle is relatively taller than other candles on the chart, then that can be considered. Okay, so a tall green real body. Condition number three, tall red real body. The second candle should be a tall red real body. Condition number four is that the second candle should close below the midpoint of the first candle's real body. So if this is the midpoint, the closing should be below that midpoint of this red candle. Condition number five, ideally, the second candle opening should be above the high of the prior green candle. Okay, so these are the conditions to identify the dark cloud cover. Again, in bearish engulfing patterns, shadows do not matter, but in dark cloud cover, shadows matter because let's say this candle had a shadow like this. Okay, the opening is not above the high of the dark cloud cover. Okay, so this is not a perfect dark cloud cover. That would be a ideal, sorry, that would be a variation of a dark cloud cover. But here in this case, it's a perfect dark cloud cover. And just like the bearish engulfing pattern, you can immediately see the shift in psychology. Here the market was bullish and suddenly the market psychology changes to bearishness. And if you watch volume, then ideally you would want low volume on this candle, which represents low demand, and you would want high volume on this candle, which represents high supply. So a combination of high supply and low demand with all the characteristics of dark cloud cover, that's very dangerous and it is very bearish. Remember, the high of the dark cloud cover becomes resistance. So you can take entry here if you want to take short position. Keep your stop loss here and you can expect the price to go down from here. And look what happens. As I said, it's a very dangerous pattern. This candle tried to poke its head above that dark cloud covers resistance but could not close above that resistance. So that's a successful test of the resistance of the dark cloud cover, and look what happens to the price. In this case, taking a short position would be risky because, see, as you can see between these two candles there is a rising window, and a rising window becomes support. So you have resistance here, you have support here. So the price is likely to remain sandwiched, assuming we don't know what is going to happen next. So taking a short position here is not advisable. Okay, but if you had taken a long position here or a long position here or here, and when you see such pattern, okay, you should either take full exit from the market, close your position, or at least take a partial exit, because you know that the dark cloud cover is a very dangerous pattern. Okay, it is one of the strongest bearish patterns available out there, especially if it is ideal. Okay, if it were a variation, then okay, partial exit would have been okay, but if it is ideal, then full exit is recommended here. And I have explained the dark cloud cover in great detail in level 1 of my Japanese candlesticks trading mastery program, which is available on this link. There you will learn this pattern in great detail. There are many more nuances to this pattern which I teach in that course. So check it out.